Well, Alex, we done got over the election cycle and everything else. Now we're in December, and the market in general, as in the market as in S&P 500, the Nasdaq, it has continued to rally since the election night. So my question to you is, do you think the Santa Claus rally is still intact for the end of the year?
The few years I've been investing, it seemed like there was a much bigger rally prior to this year, around this time. I know the S&P and the Nasdaq are rallying, but I'm seeing a lot more like individual stocks maybe have more pain. We've seen some stocks like Target come down, AMD, um, we've seen, Nike, a lot of different stocks that are coming down individually. And it seems like historically, from what I can remember, that we saw a lot more individual stock growth than what we're seeing now. I think the S&P and the Nasdaq will continue to rally throughout the end of the month, but I'm curious what'll come by next year because also historically, as we've seen, and I'm not looking at the chart right now, Kirby, but I think it was last year or the year prior, we had the rally, and then immediately coming into January, the stock market dipped. I think it was 2022. 2021 rallying up, and then 2022 it started to dip, if I remember correctly. And I know there were reasons for that with, rising interest rates and such, but um, we saw a complete inverse. So I'm curious what'll come, especially with this talk on tariffs. And I know the market's already forward looking and, looking towards that. Nike's reacted to it. But I don't know. Those are my thoughts on what I'm seeing right now.
All right, so I'm looking at the Bloomberg chart right now from when Trump was elected in 2016. The market proceeded to rally about 5%. And then after inauguration, it went up and then it dipped down to about August of 2017. Then we continued to rally. And then the gains over over the time from 2018 got smaller. Still gains, but it got smaller. And then of course COVID, you know what happened there. And then we rallied again after COVID going into the election. And the election cycle in 2013 was we maxed out and then Biden Biden got elected. It came down, but the market was still up about 4% after that. I mean, for me, when it comes to this rally here, we see a lot of things individual stock wise is in the overbought territory. SoFi, one of them that's in the overbought territory. And you've seen SoFi just been meandering and playing up and down around the 16 to 15.5 range. And that's because it's overbought. The only way to get out of overbought conditions is go sideways or down. It looks like it's a lot of sideways action going there. And it's a couple other ones. You got the Palantirs of the world. Uh, you got the micro strategies because of, Bitcoin, of course. And there's a few other ones out there. The rally, I think the whole tariff thing is overblown. And the only reason why I say I think the tariff thing is overblown is because when Trump in 2017 put the tariffs on China, and then the other side of the aisle was complaining about how it was going to hurt the American citizens as far as inflation, the inflation never materialized. And I always will tell you that, and the audience, that executives of companies are way smarter than the government. So what happened is, and you saw an influx of jobs come back to America. So you want to sell products in America, just build it in America, and then there you go. And then what I think will happen now with the tariffs that Trump is trying to put on to these other countries is one or two things are going to happen. Either one, they're going to take off the tariffs from the United States to sell overseas, or two, they're going to build in the United States. That's what's going to happen. I mean, during Trump's presidency, with the tariffs on, the inflation rate was no higher than 1.6% in any year that he was in. I mean, through the combined average of his time was 1.6%. So that's what I believe is going to happen. More tariffs on on goods is going to bring more jobs back to America. Yeah, the media is going to hoop, law, and cry about it now, but in the end game is, if you study history, you won't repeat it. That's what happened. And then with the other side of the aisle complaining about the Trump tariffs, when the other side of the aisle won the election in 2020, I think 2021 or whatever, the same thing happened. They never took off the tariffs. They just kept the tariffs on because they realized how much it was doing. It wasn't the tariffs that caused inflation. It was the printing money by the United States that caused inflation. So let's call a spade a spade. So the media can talk about the tariffs now, but then the byproduct of what's going to happen is what's going to happen. That's why even with Trump, meandering about 25% tariffs and 40% tariffs and 60% tariffs on China and all these other countries, the market hasn't went down. The only thing it's going to do is bring more jobs to the states because that's what companies are going to do. You're already starting to see the Nikes and all these other countries moving their order operation out of these countries that's going to be high tariff places. So that is what I think is going to be the end game. Will the rally keep going on? We might see a dip in mid-December, but I think the rally goes on all the way to inauguration because, of course, it's you know buy the rumor, sell the news. The inauguration is going to happen. We might get a little dip, and a little dip is just an opportunity because once they realize that the tariffs is not impacting the economy, then it's going to be, game on. And then you got the Fed at interest rates is still cutting interest rates, so that is another tailwind for the market. But you just got to play the course. But I think the Santa Claus rally is still going long and strong. Even though I want this thing to come down.
Yeah, I know. Yeah, I do too. I've been waiting for a dip. I mean, it would be great, but I like the strategy that we talked on a few videos ago about how you, in these times, in a rallying market, you invest only 50%, reserving the other 50% for, a collapse or a downturn. And I've started to implement that strategy. So I really do like that strategy. Initially, I was just kind of like buying here and there, but trying to reserve capital, but potentially missing out on, still acquiring shares and being invested in the market. So trying to time it less, going back to that saying, time in the market beats timing the market, still stay invested, but, anticipating and being prepared or preparing myself for a potential downturn, which is where you can capitalize more. Um, and it'll be interesting to see. I mean, you have a lot more years of experience in the stock market than I do. I didn't start in getting involved in the stock market till right before COVID. Um, so it seems like my years in the market have been kind of like stimulated um, because of all the stimulus money and the interest rates and stuff. And so I don't know, it'll be an interesting year to see what comes into play, especially with Trump and all.
And yeah, no, I mean, my time in the market has been stimulated also. I mean, my time in the market, Obama was in office, stimulation. Uh, then Obama, Trump, stimulation. Biden, stimulation. Then Trump, stimulation. So, seeing what's going to come next is always intriguing. But I always want to have a dry powder to the side in case something crazy happens and I can take advantage of it. But at the end of the day, the market is going to keep going higher because the thing is, the asset is the asset. The more they print money, the less value the dollar has. I mean, the more valuable the asset becomes. Do I think the government is going to stop printing money? Hell no. I don't care if you got the Doge group out there trying to cut spending and all that. I don't think it's going to happen at a scale where it'd be very impactful to the government. I hope it is, but I don't think it will be. And so they will have to print more, print more, print more, and that brings the value of the assets higher. That's why home prices are so high. It's because so much money is printed. And that is the whole key element of behind the whole thing. That's why you have the Bitcoins of the world because it's so limited of supply that it can keep going higher. It's only because these central banks around the world keep printing money. It's not because the coin itself is so valuable. It's because people are trying to store to rid itself of the government printing. I always bring up the conversation about the Mona Lisa painting. The Mona Lisa painting is so valuable because it's a one on one. But if we open up a storage room or a warehouse today and it's a million other paintings, the value of the Mona Lisa painting goes down astronomically. And that's the same thing with the dollar. They keep printing it. They keep printing it. So that's why I'm a big proponent of stop saving money, actually buy assets. Because as long as they keep printing, the value of the asset is going to go higher. So that's why I will believe in the long term in the market itself, the long term in real estate itself, because it will just keep going higher because the government can't help themselves but to print money.
That said, guys, if you have any questions, let us know down below. Don't forget to like, share, subscribe. We'll see you guys on the next one.